मैंने जोड़ जोड़ के अपना गोल्ड का ज्वेलरी बनाया है.
First of all, you never sell the gold for returns. I don't even know how it adds to my net worth.
You keep reading news about the market falling, the market rising. It feels scary to lose your money. But you mentioned about investing, which is actually something that it ties in with the next two mistakes that I want to talk about. Because one thing that I have seen, again, I saw this in my mother's life, I've seen it with all the women around me, somewhat for myself as well. Indian women are very good at saving. Fantastic. I think they know how to get the bang for their buck in every single expense they make in their life. All right. I think Indian mothers, especially, they get a massive high from saving that 5 rupees from the sabzi wala. They are just like, wow, this is awesome. I know the Frika Dhania. It's like they get a real great, there's just, they just know all the saving hacks and trips and everything, right? That's when, they are just like, we don't know what to do. And of course, by investing in a very traditional sense, I have still seen some of that. I think बहुत मम्मी ने ऐसे किया कि मेरी मम्मी ऐसे बोलती थी कि मैंने जोड़ जोड़ के अपना गोल्ड का ज्वेलरी बनाया है. रोज जो हमारे घर के एक्सपेंसेस में से पैसे बचते थे, and then my mom would just put it all together and buy some gold with it, and that was her way of investing. But that is, I think, the extent of investments that I have seen Indian women resort to, which is basically buying a little bit of gold here and there, right? Do you feel this is a mistake that a lot of women are making, in which they are just not knowledgeable enough about investing, and that's why they are not making the investments they need to make to secure their future?
Right. Yeah, definitely, Rinie. This had been happening, right, for generations, that women were very focused on saving, and in the name of investment would be generally gold, and especially gold jewelry. I don't remember any of our mothers or aunties saving gold bars in their
gold bars
lockers.
and gold coins. They did too.
No, it's mostly gold jewelry, right? And again, very societal issue. Luckily, we are, seeing more and more women participating in the capital markets. Yet there is a huge, significant portion of women in Indian population where they're still very restricted to just either savings or FDs or gold. I think this is a major mistake yet again, because the world has changed. I can tell you what used to happen in the previous generation that I've seen, how that gold would be used. First of all, you never sell the gold for returns, because there's a huge emotional attachment. This was given by my mother, this was given by my grandmother-in-law, and so I'm never going to sell that off. So you don't really invest in gold for returns. If we just keep following what previous generations did with this different societal setup and different lifestyle that we have, that's not going to work for us. It's extremely important to have investments that actually, one, beat inflation, secondly, are liquid in every sense, like emotionally or from the financially. It's liquid enough for you to support you when you need it, right? And gold, while it's a good hedge, and I advise people to have gold in their portfolio, we generally recommend gold ETFs, because, with gold jewelry, there's issues with purity, where you store it. And then for me, myself, part of my gold jewelry is in my in-laws' place, part of it is in my parents' place, and then some is with me. I don't even know, how it adds to my net worth, right? So definitely having gold in your portfolio can help if you have it in the form of gold bonds or gold ETFs. And most importantly, it's not something that really helps with your wealth building 100%, right? So a major part of your portfolio needs to be in liquid assets like mutual funds or stock portfolios. So again, that goes into the technicalities of investment, for which people will need to do like a one-on-one consultation. But I'd just like to emphasize that don't make that mistake of completely depending on cash or gold for your own future. It doesn't work anymore.
But it's so scary. Like, I think when we are, like, even if you are somebody who's not an investor, you have not invested a dime into a stock or a mutual fund, you keep reading news about the market falling, the market rising, and it feels scary to lose your money. It feels so much safer to put that money in the bank account and let it stay there, or put it in an FD and let it stay there. But I'm guessing neither of them are beating inflation, which is why you're basically losing money over time. Imagine that you have a woman come to you as a client who says, Ki, I have 20,000 rupees saved up and I have this much money in my account and I want to invest this money, but I'm scared. I'm scared of losing this money. I'm scared of not even knowing where to start and what platforms to trust. So as a financial advisor, what are the first few steps that you would advise this woman to take to at least begin her investing journey?
Interestingly, you brought something up that is the main motto of Cashvisory, because we are driven by the mission of getting every young professional to their first investments. And being a woman fintech founder, I think I all the more want more and more women participating in investments, right? So definitely something that I come across a lot, where women are coming to me that they have saved this corpus and they know they have to invest, but where to invest, how to select. Like, we talk about stocks and mutual funds and ETFs, so many names out there, right? And thankfully, Cashvisor is a platform now exists for this exact population to simplify those decisions for them, right?
So how does Cashvisory work then? Like, so if I have this money with me, what would that flow look like in Cashvisory for me to get to my first investment?
Right. Very simple. We have made the entire onboarding process as simple as it could be. Now, the first step when you want to get started with investing is really understanding your risk appetite. So by risk appetite, what I mean is, how you say that, it's very scary, the markets rise and fall, right? Different people have different reactions to that rise and fall of the market, and that actually determines your risk appetite. So the first step would be that, and on Cashvisory platform, we have a very simple questionnaire. You answer like 4 or 5 MCQs, and you get to know what your risk appetite is. Now, based on that, what you need to do is match the financial products to this risk appetite that you have. The first and the simplest products for someone who has never invested would always, from our recommendation as experts, be mutual funds, ETFs, or index funds.
What is a mutual fund? How is it different from me investing into Apple as a stock versus me investing into a mutual fund? What's the
Yeah,
difference?
very good question, really. In fact, people are always confused about stocks, mutual funds, SIPs, all these names floating around, right? I'm going to simplify that in the best possible way, all these names. So, first of all, what is a stock, right? Like you mentioned, Apple stock, or like, in the Indian context, it could be HDFC stock. It is a share of the company that basically helps you participate in the company's performance. Every time the stock prices go up, your investments goes up. Every time the stock price goes down, your investments go down. Now, what it entails if you invest in only just one company or a few company stocks. This means that with all the market movements of those particular stocks, right, your investments will keep going up and down, which is highly volatile. Right? If you've seen the stock market graph ever, you will know what I mean. On the other hand, funds is usually a portfolio of all of these different stocks and even other financial products. Now, what happens is usually, unless there's a market crash, all the companies don't move in the same direction. So your risks get evened out. And that is what makes mutual funds a safer alternative, more of a starting point for people who have never invested. Similarly, exchange traded funds are just mutual funds that are traded on exchange, which is your BSE and NSE. There's index funds that actually follow a particular index. Now, what is the index? You would have heard Nifty 50 and things like that. It basically tracks the top 50 companies in India. For S&P 500, tracks the top 500 companies in the world. So these index funds actually just mimic that particular basket that it's tracking. So for a Nifty 50 fund, it will connect that particular index. So these are different products, but one thing that is the same in all of these products is that it is not betting on just one particular stock. That makes sure that it's a starting product for you to start your investment journey.
Absolutely. So it's just like you're not putting all your eggs in one basket. Technically, you would be
Definitely.
investing in like one index fund, but in that index fund itself, because it's a combination of
50
so many different
companies.
funds, I am heavily invested into S&P 500, as well as a fund that tracks Nifty 50 as well. Because then what you're doing is that you're betting on the economy of the country. Let's say, for example, if you invest into a fund that tracks the Nifty 50 or the top 50 companies of India, you know that if the Indian economy grows, this whole thing will hopefully and most likely grow. So you're
Yeah.
kind of dampening your risk that way. Instead of just banking on like one or two companies, now you're banking on 50 companies all at once. And I think that makes it quite easy. And is this
Yeah.
something that you can invest into through Cashvisory as well?
Absolutely. And in fact, we go a step further. So even when you go for mutual funds, like I said, let's discuss only equity mutual funds. That means that there are different kinds of mutual funds. There are debt mutual funds, there are hybrid mutual funds, right? So you need that diversification in mutual funds as well. So instead of betting on just one kind of fund or one particular economy, why not diversify into different sectors or different geographies? And what we do is to curate this portfolio of mutual funds for you, which matches your risk profile. So what happens when you get started on Cashvisory is that, and this is completely, automated journeys. Like you can just go and fill in the questionnaire. Automatically, you will be able to you will be taken to your customized portfolio, which is a group of mutual funds that we have put together that we know fulfills your goal requirements and also matches your risk appetite. So basically, you don't have to go through a fintech platform where you have to sift through 5,000 different mutual funds or so many different stocks and create a basket for yourself. All is ready made for you, just to get you started from a very beginner point of view.
Absolutely. Wow, that's a huge mental load off. So let's say if somebody does have questions for you, are they able to approach you directly to be able to get your advice?
Yeah, they can book a consultation with us from our website, and we can even put the link in the description of this video. They can currently we have a promotion of a free 30-minute consultation, which is for a very limited time, and it's just because we really want to make good quality financial advice accessible to everyone. So this is our initiative and in that direction, and it's completely no obligation, no spam, guaranteed call. So just come and ask all your questions, whatever you need to, and then explore onto our app.
How lovely. I mean, how often do you get an opportunity like this where you're going to a financial advisor who isn't trying to sell you anything? They're just trying to advise you and then letting you take your own decisions. Amazing. I think we have learned so much about investing and not being scared of that. And this is obviously a very big financial mistake.